It's Tuesday, the 9th of March 2021. Welcome to Fear and Greed, the business podcast that sets you up for a successful day. I'm Sean Aylmer. The federal government readies a rescue package for the tourism industry, including cash handouts and low-rate loans. That's our main story. Also coming up in today's podcast, Wall Street European markets and the ASX surge on the back of big spending in the United States. Rumours of a takeover of Treasury Wine Estates sends its share price running. And International Women's Day unearths some not-so-impressive facts about the gender divide. Later in the podcast, I talk to Chief Investment Officer of Mercer Pacific about environmental investing. But first, here's a brief look at markets. Wall Street was higher in early afternoon trading, with banks and miners leading the way. The shift into stocks that do better when the economy grows continued, with the Dow Jones Industrial Average up 1.5% and the S&P 500 0.5% higher. Tech stocks, however, fell further, and the Nasdaq 100 was down more than 1%. The Nasdaq has now fallen 8% since the beginning of February. European markets had a strong session, with bourses up across the region. The Stoxx Europe 600 closed up 2.2%. In both Europe and the US, the $1.9 trillion stimulus package from the Biden administration has supported markets. The local market ended yesterday up 0.4% to 6,740 points, though at one point, the bourse was almost 2% higher. News of the Biden spending package provided the initial push. Among the big stocks yesterday, miner BHP rose nearly 2.5%, while Rio Tinto was up nearly 3%. Gaming manufacturer Aristocrat Leisure and gold digger Newcrest Mining were also up around 3%. The worst performers on the ASX yesterday were several of the tech stocks, with buy now, pay later group Zipco down 6.7%. Having said that, Zipco is the best performing top 200 stock over the past year, up more than 300%. Oil prices have surged on the back of renewed confidence about the global economy, in large part thanks to the massive spending package. Brent crude pushed above $70 a barrel for the first time in more than a year yesterday, before falling back overnight. Also supporting prices are OPEC's decision to keep supply unchanged for April and a tax on Saudi Arabia's oil infrastructure over the weekend. The price of gold continues to fall, and it's trading at $1,680 an ounce, and the Aussie dollar is buying 76.7 US cents. Finally, Bitcoin has gained the influential support of Citi, one of the most powerful investment banks in the world. Citi said the cryptocurrency was the next great technological shift after the internet and cloud computing. Bitcoin could overtake the US dollar as the main international trade currency, while the cryptocurrency will increasingly be available for use in savings and lending accounts. Once that occurs, Citi says, Bitcoin will become a so-called fiat money. Fiat money, like the US dollar and the Aussie dollar, is not backed by anything of value, but is accepted by governments. 1 unit of Bitcoin is currently worth more than 51,000 US dollars. The total number of coronavirus cases worldwide is now 117 million, with 2.6 million deaths. The federal government is set to announce low-interest loans and cash grants to support tourism-related businesses hit hard by the coronavirus pandemic. They'll be switched on when JobKeeper ends at the end of this month, according to reports in Nine Media. The package will include support for airlines, small tourist service operators, and accommodation outlets, and it will also include incentives to drive demand rather than just propping up operators. Federal Treasurer Josh Frydenberg played down the speculation, but then spent the day in northern Queensland allaying industry fears that the government won't come to the party. Mr. Frydenberg said it was inevitable that a rescue package for the sector be targeted. Travel and tourism has been decimated during the pandemic. There's been a drop of 41 million domestic passenger airline flights over the past 12 months, with closures of both international and state borders hitting operators. Tourism was supposed to be worth about $130 billion last year. Instead, it was worth not much more than $20 billion, according to Tourism Australia. The number of holidaymakers and students have been particularly hard hit. Operators across the country have suffered. Virgin went bust, and the share prices of companies like Qantas, Sydney Airport, Flight Centre Travel, and Corporate Travel Management are down sharply from their levels of 2019. The pain was felt even more acutely among the thousands of small and medium-sized businesses in the sector. The media report said direct cash payments to businesses hit hardest will be part of the package, along with government-backed loans. The announcement is part of a broader package which will include another $1.2 billion in wage subsidies for apprentices and changes to migration rules to fill areas of workforce shortages. Prime Minister Scott Morrison is keen to look beyond the pandemic and is set to outline his vision at a conference today. The full announcement on tourism from the government is likely within the next week. While picking specific sectors to support isn't always great economics, these certainly are unusual times, and the tourism industry, a gem in the Australian economy, needs all the help it can get. In a moment, the rest of the news you need to know this morning. Overseas, China's top diplomat said the United States needed to stop interfering and finger-pointing and called on Japan and India to cooperate with Beijing in the region. He said it was better for the countries to be friends rather than enemies. Former President Donald Trump's last bid to overturn last November's election, yes, he's still trying, has been rejected by the US Supreme Court when it said it would refuse to consider a challenge to the election results in Wisconsin. And Bloomberg has done the numbers on Elon Musk. The founder and chief executive of Tesla lost $27 billion last week as the share price of the electric vehicle company tumbled. He still has $160 billion or so don't feel too bad for him. He's now number 2 on the Bloomberg billionaires list behind Amazon's Jeff Bezos, who's $20 billion ahead. Locally, shares in Treasury Wine Estates rose sharply yesterday after rumours circulated that French drinks giant Pernod Ricard was mulling a takeover bid for the group. Treasury, owner of the Penfolds brand, has had a tough 6 months since China put prohibitive tariffs on wine imports. Treasury's share price fell 40% from its peak in August to its low in early November. It has since recovered somewhat, but yesterday closed 6% higher as a result of the rumours. It was the best performer of the top 200 stocks yesterday. Westpac has lifted its economic growth forecast for 2021 to 4.5%, up from 4%. The bank's chief economist Bill Evans said the key components of the official growth figures released last week surprised on the upside, including household consumption, business investment and dwelling construction. Mr. Evans expects the economy to be back to pre-pandemic levels by the end of this quarter. The value of China's imports from Australia hit a record high during January and February, despite the bans and high tariffs on products from wine to barley, beef and coal. The reason for the 8% jump during January and February was high iron ore prices. Total imports from Australia was $20.5 billion, according to China's customs agency. One of the federal government's key COVID-19 rescue strategies was for small and medium-sized businesses, and it was to guarantee some bank loans. But fewer than 3,000 new loans, worth less than $300 million, have been approved since August last year. Borrowers have blamed extra rules imposed by the banks for the slow take-up. There's been a record run of 149 equity raisings since the beginning of the year, according to the Financial Review. That's 55% more than a year ago, and the highest since records began back in 1988. The deals have raised almost $3 billion, though initial public offerings comprised just 6% of the total, with the bulk coming from listed companies raising more money. Former Nationals leader and Deputy Prime Minister John Anderson will run for Senate again at the next federal election, saying he was worried about the nation's future and wanted to be a mentor within the National Party. Mr. Anderson left politics back in 2007, and his return has the blessing of current leader Michael McCormack. The largest shareholder in oil giant Santos has sold 1/3 of its stake, or 5% of the company, for $785 million. Santos said the group remained fully supportive of the group's strategy and future direction. Analytics and intelligence software group Nui listed on the ASX late last year, but has come under fire from large investors and parts of the media about its longer-term earnings profile. Its share price has been volatile, to say the least. Shares were issued at $5.31. They reached $11.16 in late January, and yesterday closed at $4.60. The group released a statement to the ASX saying its first half revenue was in line with management expectations and the fundamentals of the business remained strong. A new report from CoreLogic shows that women are falling behind men when it comes to owning a property, And a big reason for the disparity is a gender pay gap. Based on average weekly full-time earnings for men and women, it would take a woman an additional 10 months to save a 20% deposit. It has long-term impacts, including greater wealth accumulation for men because they're in the mortgage market for longer. There are a number of gender-based surveys out yesterday on International Women's Day. Another interesting one came from Boss magazine. It said just over 1/3 of all managers in major companies were women, meaning 2/3 are men. And that figure hasn't changed over the past 12 months. The best performers of large listed companies were Suncorp, Westpac, Centre and CSL. All had close to a 50-50 male-female split. And federal Labor is considering requiring companies with more than 250 employees to publicly report salary data. There's still a $242 a week gap between the salaries of men and women. Finally, Mexican restaurant chain Guzman y Gomez said annual sales would eventually reach up to $3 billion as it opens 30 to 40 stores a year in Australia and pushes into Singapore, Japan and the US. Sales this year would hit around $400 million, according to a report in the Financial Review. The group is considering a float on the ASX and says its philosophy that fast food doesn't have to be bad food is winning over customers. I've spoken a number of times now about big companies and fund managers making the shift towards sustainability. Now, in a move that's sure to put others on notice, Mercer, a very influential player in the world of funds management, has committed to achieving net zero absolute carbon emissions by 2050. And the global giant is starting with Australia, with a target set for its Australian funds and the Mercer managed investment options within Mercer Super. There's more than $36 billion in assets under management as at the end of last year. Kylie Willment is a Chief Investment Officer of Mercer Pacific and is my guest this morning. Kylie, welcome to Fear and Greed.
Thanks, Sean. Great to be here.
I have had a Mercer super fund in a previous role. What that means is the money I'm putting in my superannuation, where that money is going to, where it's invested in, it's going into assets which have net zero carbon emissions. So does that mean that you're only looking for particular assets in certain industries? Is it that you offset one against the other? How does it work?
Yeah, so we're very focused on the transition of the whole economy and indeed the whole portfolio. So when we've been making or considering making this commitment, we've analysed the portfolio and all of the companies in the portfolios on the carbon transition spectrum. And so just to simplify that a little bit, we've got a spectrum that we call from the greys, which are the heavy emitting companies that have little capacity to transition to a lower carbon world.
For example, maybe oil and gas type organisations? Yep.
Yeah, coal companies, exactly, through to what we call the greens. So that's the climate solutions, new technologies in order to get us to a lower carbon world. Renewable energy, obviously, assets would be an obvious example there. And then, of course, we've got the in-betweens, and they're all of the companies in the world that have some level of carbon emissions and some capacity to be able to transition to a lower carbon future. And so we're really taking this holistic approach, which over time will see us reduce the exposure to those greys, will see us increase exposure to the greens, and for those in-betweens, really use our influence and our portfolio positioning to move that rump of the portfolio really up along the carbon reduction spectrum, so that when we look at our portfolios in 10 years' time and 20 years' time and 30 years' time, we're getting towards that net zero position by 2050.
There's a lot to unpack in what you just said then. I'm going to start with the last part, the influence. It's interesting that Mercer and others now are taking steps to force people to move up the green curve. And, you know, when it's the shareholders, which Mercer is a shareholder in these companies, it really matters because you own the company. How much influence do you have over companies?
Yeah, this is a really important question, Sean. And we believe that as shareholders or owners of these businesses, we have a really important role to play in using that influence to be able to drive change. And we think that is a much more powerful approach to just simply perhaps divesting from those grey companies, which, in all honesty, gives someone the ability to say, look, I don't invest in those companies. But the reality is someone goes and you sell the shares, someone goes and buys them, and the world just continues on its merry way. You haven't really affected too much change. Yeah. To affect the change, shareholders can use that influence. So you do that through engaging directly with companies. If you're a significant enough investor, you can do it through exercising your voting rights, which is a really important tool to send a message to companies. But I think more importantly for investors like superannuation funds, often we're not that close to the companies themselves because we often employ underlying investment managers. So we do two things. We're engaging with those investment managers and expecting them to engage with the companies on our behalf. And we can get involved in what we'd call collaboration with other investors, because let's face it, we are all facing this challenge and we all need to get to that lower carbon future. So where investors have common challenges, it's very powerful for them to join their funds under management together and use that collective voice to be able to drive that change.
It was really interesting during earnings season that the engineering companies, the pipeline companies all came out and said, we're looking for opportunities in renewables. We're looking for opportunities in greener areas. Obviously, they feel the breeze and know which way it's going. Are companies significantly more willing to shift greener, for want of a better term, because that's where they see the future?
At a company level, they are waking up to the fact if they want to survive and they want to continue to attract investor dollars and therefore generate returns for their shareholders, they need to adapt and change and get on that transition spectrum themselves and make sure that they are moving up along the spectrum. And so investors and shareholders have been part, I think, of making companies lift their heads up and make those kind of commitments themselves, but also we know that the regulatory backdrop and the commitments from governments around the world is also becoming supportive of this. And so the time for head in the sand, I think, is starting to pass.
Kylie, thanks for talking to Fear and Greed.
Absolute pleasure. Thanks, Sean.
That was Kylie Willment, Chief Investment Officer at Mercer Pacific. If you follow Fear and Greed, you'll find the extended version of my interview with Kylie as bonus content in the Fear and Greed playlist. I definitely recommend having a listen. It's a terrific insight into the ways these big funds are now willing to use their financial might to encourage broader change. Kylie also goes into the financial impact of the decision, including how they test their portfolios against different future scenarios and the response from investors. It's all in my full interview, available now to Fear and Greed followers and subscribers. That's it for this morning. Another busy morning. We made it through without a mention of Meghan or Harry. I'm pretty proud of that. It's Tuesday, the 9th of March, 2021. I'm Sean Aylmer, and that was Fear and Greed. Enjoy your day.